Happy Tuesday. My name is James Boyd. We welcome you to the Investor Master Series. We also have Barbara Armstrong in the chat. We welcome her, and we have many of you here today. Fayez, BJ, Josh, Ocean Life, Tatiana, and many others. Welcome to all. Today, May 6th. Let's go ahead and get started. Now, remember, you could follow Barbara Armstrong or myself on X. We post our handles. Feel free, Barbara, to post your handle actually right in the chat, so that way they could just hyperlink to it. And also just remember our first name, last name, capital J, capital B, C, S. Quick reminder, we don't reach out, solicit anything. So if that does happen, if it ever did, okay, remember that's not us, and just don't reply. Now also remember, when we get started here today, remember that options carry a high level of risk, not suitable for all investors. When we talk about the information here that we'll talk about here today on stocks and options, remember, they are meant for general informational purposes only, should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Now, Schwab does not recommend the use of technical analysis as a sole means of research. It's a way, it's not the only way. And also remember, when we talk about examples, they will be done in the Paper Money software application. Investing involves risk, including loss of principal. And also remember that past performance is no guarantee of future results. Now, when we also talk about options, if we bring up short options like selling calls, selling puts, and we're talking about American style options, those could be assigned, okay? You deliver the shares at the strike price, you buy the shares at the strike price prior to expiration, regardless of the in-the-money amount. So just always remember that on cover calls and cash secured puts in the examples that we talk about, okay? Now, mostly on those. Now, also remember, when we actually discuss upcoming workshops, we're going to be in the Anaheim area, the Advanced Options workshops at the Anaheim Marriott. This is the Advanced Options, okay, and covers like verticals, diagonals, calendars, among other topics. And you can actually go to also the Market Drive that's in Miami. That's a one-day event. And also a Market Drive that is also in New York. Now, we do them all throughout the country, different topics. And if you go to schwab.com/events, you can actually get more information regarding that. Speaking of that, I want to kind of show you something just real quick. Save this link. You want to bookmark this, because on this link that I'm sending you, you're going to see where it says live webcasts and virtual workshops. Did you hear what I just said? Virtual workshops too. So we got live webcasts, we got on-demand webcasts, think TiVo, okay, virtual workshops, and in-person events. So no matter where you are, we're going to try to have you covered. And so if I clicked on that virtual workshops, and if I scroll down, okay, now where do we go again? Live webcast and virtual workshops. Scroll down to this week, and what you're going to notice is this week we also kicked off the Advanced Options Virtual Workshop, okay? And so that is going till Thursday. There is a Q&A session really on Friday. So a quick heads up there. So that re-kicked off. We used to do them historically, quite a bit of them. We re-kicked them off again this week. So just want to give you a heads up on that. Now, I also want to go back to, just real quick, we got Barbara with us. And if we actually look at Barbara, Barbara will be teaching later on today on getting started with technical analysis. Feel free to join her. She also teaches the trading a smaller account on Monday and on Friday. All right, now let's kick it off here. So first off, what I want to do is I want to kind of take a quick look at, I want to pull up the SPX first off. Bullish, bearish, how do you read it? Bullish or bearish, okay? Now, again, we've been kind of using the fib lines, being consistent, okay? And once we actually broke above that fib line, we talked about the 61% line, we've been able to stay above that, okay? Now, we could talk about what's going to happen in 20 days from now, 30 days from now, 10 days from now, we don't know. So that's why the technician is just monitoring the levels. If we look at the levels, and we talked about this on Friday, right? We talked about how if the market can get above the 78.6, that old resistance might turn into new potential support. We talked about bullish engulfing candles, hammers, piercing line candles. We also talked about the tails or the wicks of candles, okay? Now, when you look at the indexes, keep an eye on where the intraday low was and if we get a tail, okay, that could be a sign of a potential bounce. So the SPX, we would say, yeah, we like it. Some investors might like it better when the price was above the moving averages, but this might be that classic retest. Remember, day two of a breakout tends to be the high, and then you get a pullback and or retest. Here we are right now. All eyes on 55.78. Now, if we go back and take a look at, let's say, the NDX briefly, you look at the NDX and look at the 78% there. Notice if we're talking about breakout, okay, this is not a breakout. That's a close above. That's not a breakout because it's not a green candle. That's the breakout. Notice day two again, the highest point. Kind of see patterns over time, right? And then if we went back and took a look at this, we would actually say right now, all eyes really on the area of about 19,492, okay? So we made a higher high, and now we're trying to be in the process of really making a higher low. That higher low trying to be the area, the old resistance, new support, 19,492, okay? Now, if we take just a quick look, we shouldn't see a whole lot of difference in the Dow. I just want to point out the Dow a little bit because the Dow did really show more of that tail. And that was one of the points we pointed out on Friday regarding bounces, okay? Now, could the SPX turn into that, okay? Now, remember, day two was right there. That wasn't the high. It was actually the intraday high was there on the third day, one day off, and then yank back. Now, if we get a bounce here and we start to go up and we start to go up and we start to go up, then technicians might have to say, well, you know, yeah, but, okay. Well, now they're kind of denying what's happening on the chart because they're anchoring themselves to what they want to believe and feel and what they read, what they heard, and so on. More of the story is 406 is still there, okay? And some investors are still actually trying to ride that trend. Now, the interesting thing about the market is it doesn't necessarily mean that someone has to trade a specific strategy. They might trade different strategies based on that they actually want to trade direction and also maybe some time decay, okay? And that's up to them, and we'll talk about that here today. Now, kind of the negative that we actually saw here today. What was up actually quite a bit yesterday that had a follow through this morning? Can you name it? What closed up yesterday pretty good and then followed through, the keywords is overnight and this morning? Gold, okay? So that's number one. Now with gold, if gold is going up, what tends to also go up with it? What tends to go up typically with gold as well? Come on, we gotta know the patterns, okay? Well, if you're getting gold to go up, there's a pretty good chance the VIX is going up. Now on Friday, we exited the trade on the volatility, and over the last couple of days, we've been really seeing the VIX getting a crossover. Now we haven't had a crossover in a while. Let me back this chart off for just a sec. Let me kind of bring this back down. So the crossover negative was on 411. And what you're going to notice is through time, we haven't seen a crossover. Now, if we get a negative crossover in the VIX, that probably means a positive crossover on the S&P 500. And what you're now going to notice is if I bring this forward here, you're going to see that crossover really happen on the second. If we go forward to the very next day, do we see it a little bit more? Yeah. So really yesterday at the close, we started to see more of a crossover. Now, does this probably mean that there's a bunch of buying opportunities, or could that mean potentially selling opportunities? And I'm talking about to sell positions. I'm talking about to tighten stops. I'm talking about to protect positions. Is this where the investor says, yeah, I'm going to enter a whole bunch of brand new positions and hope they go up? Now you totally could, okay? But usually if the VIX is crossing to the upside, we got to learn from what happened in the past. That might mean there might be more stocks that might be under pressure and or pulling back. Now, true to what we said, given the environment that we're in, it's probably unlikely that the VIX just goes down to 15 where like nothing was happening. The VIX is most likely probably going to be elevated. Some investors are thinking 18 might be that new floor, and then that volatility might stay higher for longer. So far, those technicians have been right in with that comment, okay? Now, the one thing I also want to really bring up is when we go to Market Watch, let's pull up the sectors. Now notice that in the sectors, we also have gold as well. We said gold, or precious metals, is really trading like a defensive sector. Doesn't have dividends, okay? And remember, dividends are not guaranteed in the future. They can be cut, they can be raised. We're not talking about fixed income, okay? Like treasury bills or something like that. Dividends are not guaranteed. Now, anything that stands out on this table here, anything that you noticed today? Well, gold, if we're talking about the highest percent change, gold is at the top. Anything else? Okay. Well, the one thing we kind of notice is when we go over here to this right column right here, you're going to see that there's a bull flag right there. That's a little unusual. Nothing else has that. And it's really the utilities. Now, the one thing you're going to really notice about utilities is utilities was softer compared to the S&P 500, hence the gray color. And you're going to see the RS stands for relative strength, softer compared to the S&P 500, hence the gray color. And then in the last 5 days, utilities has pushed a little bit more. Does anybody know the stock that's actually pushing up the utility space? I'll give you a hint. You got 3 letters, and if you buy a vowel, the middle letter is E, okay? Give me the stock. Now, if we take a look at this, as I'm getting those answers, what does that look like on the chart? Well, there's you right there, okay? Now, a lot of times people will say comments like, well, utilities are boring and so on. I don't really like those stocks. Well, it just kind of depends on what you want to do. If the investor's goal is to ride the trend, sometimes those trends are a little slow-moving trends, but they can trend. Some are going to be more like Palantir, where they rip to the upside, right? And so they're more volatile. The question that the investor probably needs to ask is, maybe does it make sense to have a little diversification? Some trends that might be a little faster, like tech and financials and discretionaries, and some other sectors that might be a little smoother in terms of trend. But also that their business models tend to be more through different economic times. They don't have as much variation on their financial results. And some investors, they like that, okay? Now, one of the stocks, yes, good job. So the one that actually really got a good push here today is CEG. Now, CEG, for example, got a push right there. And what you're going to notice is it had a gap up and it closed above the resistance being right around 227. And really what you're going to notice is about 4 days in a row of decent push. That earnings right there, they met the estimate was 214. They actually got 214. And you're going to see that so far the investors have liked it. Now, my comments are not going to be right now on CEG. I want to go back and just take a quick look at some of the other stocks in that area. Now, remember, if you're watching this and say, well, that's the problem, I don't really have a watch list. Well, we're going to use the S&P 100 as the available stocks to look at. And if I click on Market Watch, we go to, let's say, quotes. I'm going to just go to where it says Market Watch, and visualize, okay? Now listen to what I said. I said, so imagine that our list is only the S&P 100. Now you might be saying, well, James, why did you say that? Well, if someone doesn't have a list, if you start with, let's say, a bigger group of stocks, let's say the S&P 500, the person might be a little overwhelmed. Well, if we talk about the S&P 100, you got NE, ESSO, and Duke that are in there, okay? Now, if we went to the S&P 500 and said, well, if I look at utilities, how many more stocks in the utilities do we see? Well, you're going to see a lot more. So wherever you are, if you say, I'll take a smaller list, S&P 100. If I take a bigger list, utilities of the S&P 500, obviously a bigger list. Now, the ones that we're going to look at in here is we're going to type in WEC for just a moment. Now, WEC, if you take a look at this, is kind of budging up against that upper area. Now, like we said on most stocks, last week we made the comment, many stocks kind of look like they're doing like an ascending triangle, okay? There you go. Okay, and especially over the last 2-3 weeks, these dots, which are signifying or could be showing close above the high of the low days, they're getting a little higher. We're now getting into the apex. Now, here's the deal. Nobody said someone had to buy the shares of the stock. They might say, look, I'm going to go look and see, are the options available? Okay. Now, what I'm going to do is I'm going to go back to the trade tab for just a sec. Let's go look at the margin account here. And what I'm going to do is I'm going to go to the June expiration. Okay. And what I want to do in this case is, let's say the investor says, look, I want to buy a call option. Okay. I want to buy a call option, which gives us the right to buy the shares at what? Well, if we chose the first one in the money, it would be the 105 strike. Now, if the investor just did that by itself, they're risking what the premium is, okay? It has unlimited upside. Con about it is negative time decay. If we took a look at, let's say, the open interest, what you're going to notice is there's only one contract in the world, okay? So, wow, not very liquid. Now, if we come to this one, 79 contracts. If we come over here to the put side, 19 contracts, 21 contracts. The moral of the story is this could literally be one person that took 79 contracts on the 110s, and on the 100 and the 105, it could be just one person. It could be, probably not. But what you're going to notice is some of these utilities don't have that liquidity. Now, what I'm going to do in this case is we're going to go to the 110. We're going to try to go to where there's a little bit more liquidity. And this is so far. Now, the open interest coming in today was 79. The volume on that 110 today is 48, which means tomorrow that open interest number is going to change. Volume is today. Someone bought the contracts, sold the contracts. They're not netted off. The open interest is the number of contracts open still and on exercise. We're going to right click on this 110. We're going to go buy, and then what we're going to do is go collar synthetic. Now, here's the deal. We do not have to do the exact same strikes. We're going to pick the 110, call, and what do you want the stock to do? You want it to go higher than the 110, of course. And then number two, we're going to come down here and sell the pet. Okay? Now, notice when we sold this put or looking at which one to sell, is this really enough premium? Many investors might say, James, I want at least 1% of the stock price. That's not high enough, the investor might say to themselves. James, if we get something like 145 in the middle there, at least that's 1% of the current stock price. So some investors usually have like a certain amount of option yield they're trying to get. We know when we say dividend yield, we're just saying the last year of dividend, if they paid 4 quarters, that dividend divided by the current stock price and gives dividend yield. We're taking that same idea and we're just saying, look, if we got maybe 145 divided into the current stock price, let's just call it option yield. Same idea. Now, we're not going to choose the 100s. Doesn't give enough premium if we're looking for 1% or higher. We're going to look at the 105s. So notice when we do the 105s, it's going to make the obligation to buy the shares a little bit closer. Now, what's the debit? Well, the debit is $1.23. Who cares? Well, we care because, well, if we have a right to buy the shares at 110 and the debit is 123, that's going to tell us where the break even is. So that break even right there is at 111.23. Now, if we take a look at this, we're now also going to see the maximum profit. The maximum profit is infinite. Now, here's the deal. A lot of people like that. Like that really does a lot for them. On any bullish trade, like buying stock, you could say infinite. It doesn't do anything for me, okay? It's just what it is. How realistic is it that it goes infinite? Never seen one go infinite, but sure. It's just saying there's not a cap, okay? Now, the max loss, this is saying if it went all the way to 0. Now, are we going to let it go all the way to 0 in this example? Probably not. And that's where we're going to do a single order. First triggers SCQ. And we're just going to right click on this and create opposite order, okay? Now, in this case, what I want you to see is we're going to set a conditional order to exit. How do you do that? Well, just like we showed here. We're going to go over to this gear right here. And what we're going to do is we're going to place a exit if the stock were to get at or below a certain price. Okay. Now, if you take a look at this, what would that exit be? what would that exit be? Well, let's go back to the chart. Let's go back and look and see where that trend line is. If we go back to that trend line and say, James, the line that we see is kind of probably right around 107.85. That's the last touch. We're going to take 107.80. Okay. Is that the line? Let's go back and double check. What do we got? 107.76. We were close. 107.76. Okay. Times 0.98, less 2%, it's going to give us 105.60. Okay. Now, the question we really got to ask ourselves in this case is, but what's the risk? Well, imagine that the investor owns shares of stock. We don't. But when we figure out like what's the potential risk, it's really the stock movement times the number of shares. Okay? So if I put a stop or a conditional order at 105.60, okay? Well, what's the difference? 109.74 minus 105.60, it's going to give us about $4.14. But we don't have the shares. We have the option. And if we have the option, we're going to take that 414, the risk per share, and we're going to times that by what? The delta. Okay? The delta. Now, let's just say on this, the delta of the position is 80. Well, if we took 414 times a delta of 80, that potential loss is going to be somewhere right around about $320. Now, let's just make sure we're all together. So if the stock is at 109.74 now, are we on the same page? Where'd you get the 105.60? We took 2% less than the diagonal support. 414 is just the difference. And we don't have shares. So when we're kind of looking at what the potential loss could be, we're just timesing it by the delta. Okay, so that theoretical loss might be in the ballpark of about $320. And that's going to allow us to kind of see, well, what's the position size going to be? Now, let's say in this case, the margin account, let's say we do one contract, okay? Now, on that right there, and let me go ahead and put that there. We're going to pull it up. So I was doing that on that other, yeah, there it is. And what I'm going to do is that price, 105.60. Let's put that there, okay? And let's go WC, method, okay? Less or equal to. Now, again, if that confuses you right there, we're going to read at the bottom just to verify, okay? And what you're now going to see is, let's read what it says. Mark price of the security is less or equal to 105.60. What price? The stock price of WEC. If the stock price gets at or below 105.60, it's going to trigger the options to exit. Okay? Save, confirm and send. And now what we see right there is we see what the commission is, the cost plus the commission. And we also see, for example, what's the buying power effect. What is that buying power effect? They're setting some money aside just in case the paper money account, the margin account, was assigned. What does assigned mean? Well, if you sell the put, that means that the investor is long or buying 100 shares of stock at the strike price, irregardless if it's at expiration. So if you sell the put, it's at any time, okay? Regardless of the in-the-money amount. We're going to send the order. So trade number one there is we saw the utilities. Second, we saw the CEG. Now, by the way, could CEG kind of maybe yank back a little bit and maybe try to tippy-toe all over the moving average line and get a bounce? That's the idea. Now, sometimes if people say, well, James, I have ideas, but then I forget, there's nothing wrong with setting an alert here. So we're going to kind of say, look, if we get in that area closer to the moving average, alert us. This is not an ordered entry. It's like an alarm clock, okay? Create an alert, right-click on the chart, wherever you want the alert, right-click. We're going to say, look, if we get at or below. Why at or below? Well, we're trying to get the price a little bit closer to the moving average, okay? Create. Now, I'm not going to do this here, but if we had a little bit more time, the other one that kind of stood out a little bit that is kind of doing the exact same thing is AWK. Now, if the investor said, James, I'm going to wait for it to break out, Well, if we went back, let's put the alert. Let's right click. Where would you say it's breaking out? If you said, James, I'm saying it's breaking out right around where your pencil is, right click on the chart, go to create an alert. And if we're saying we want it to get at or above, it already has that. That's how it's defaulted. And we could just now and say create. Okay. Now you could also, it will make a sound. Okay. It will also send it to your mobile device. Okay. And you're going to see that we're going to create that. Okay. Now there it is. And by the way, it could also, mobile could be a text, but it could also email as well. Okay. So mark price, meaning the stock price, if it gets at or greater than 150.84. Okay. Now, any questions there? Now, I'm going to go back to, I see some questions on Monster. Let's go back to Palantir for just a second. Okay. Now, yesterday we sold in the class the example on Palantir. And my gosh, felt pretty smart after that. Okay. Now, it gave an opportunity to sell right into the prior high after major rallies, and the stock then gapped down. Now, there was some interesting commentary from the CEO regarding kind of the adoption of artificial intelligence, okay? Nevertheless, the stock actually went down. Now, why do I bring this up like we have bad feelings? Well, I just saw this morning that when I looked in the IRA account, sad for the paper money account, there is a position which we did not know that we had. It's Palantir, and it is really short the 95 and long the 90. What does this mean? Well, yeah, there's still some dollars there, okay, but that means that if the stock went down $15, it ate away at that position. It could have been more. Okay, and you could always say that, right? Could have been more. Okay, now, so we'll leave it on right now, but that was the one thing I said, oh my gosh, I didn't realize we had that. We talked about exiting the position, but then forgot another position was in Palantir. Now, if we said what trend is Palantir in, we're going to take the top line and you're going to see that it is in trend 5. What does that mean? You've fallen down below the 10-period moving average, and now you're losing momentum. Okay, now I want to also go back to the other one which was asked about, which is MSTR. Now MSTR went up to that level, okay, and then what we see is now the price has now, for example, on the 10-period moving average, okay, we got a red moving average line. Is that bullish or bearish? Well, that's what we just pulled up on Palantir, right? If the price falls down below the 10-period moving average and that 10-period moving average goes red, that's first sign of weakness. Some investors might decide to sell. It's more aggressive, but the investor is saying, I'm starting to see signs of selling and losing momentum on the price. The second negative sign on Monster, a little bit more confirmation, is the moving average crossover. And that moving average crossover did happen as of yesterday. So we have negative sign, 10-period moving average, red. Crossover happened, 10 below the 20, negative. If that 20-period moving average went red as well, well, that's just waiting for the last nail in the trend coffin, so to say. Okay? Now, the confirmation isn't free. If the investor says, I'm going to wait until we finally get that third nail, well, what does that probably mean? It means that the stock has dropped down deeper and deeper and deeper and deeper to get the confirmation. So that's why people say, James, I'm not sure about selling in that first nail, so to say, because it might be a little early. They like a lot of times maybe that moving average crossover to show, which it is. And then they might say, hey, James, the last, I want more confirmation. I like to ride intermediate, longer term trends. We haven't seen the 20-period moving average crossover yet. Okay. Now I want to go back to just real quick. I want to go back to something just real quick. And I want to see something. What I'm going to do is give me about 15 seconds, just real quick. I'm going to pause the video just real quick. and give me about 15 seconds. Now, I'm going to give you a homework assignment as I get 15 seconds. I would like you to also type in the chat what you think the trend is on a stock like First Solar. Give me 15 seconds and tell me what you think the trend is. Okay, so First Solar, right? When you take a look at First Solar, I want to kind of talk about a bearish example, okay? Now, if you look at First Solar, historically, it's had some relationship to energy. In other words, if energy prices were to decline, sometimes you get solar to get pushed down, okay? You could go back and study that. Now, First Solar, you got to imagine where are they probably getting many of their parts? The United States of America? Maybe. Okay. Got to imagine they might be getting many of those parts, let's say in Asian countries. Okay. Now, what I want to do in this is I want to show a bearish example. Now, I want to give full disclosure. Okay. When we look at the portfolios, are they more bullish or bearish? And I'll give you a quick heads up. Well, if we look down at the delta column, you're going to see that we have way more bullish positions, meaning positive delta, than bearish positions. Okay? Now, if we did a bearish position, it's not going to take the total delta to be, let's say, negative delta. If the portfolio delta was negative, that means we have more bearish positions than bullish positions weighted by delta. Okay? Now, if we look at the margin accounts, that is it more bullish or bearish? It's still bullish. Are there any bearish positions right there? I don't see any. So what I want to do is I want to kind of go back and maybe try to pick on maybe a stock that might be at potential risk. Wait, how do we know that that stock is going to go down? Oh, we don't. Okay. If we look at if we look at First Solar, you're going to notice that's kind of stock has been hovering right around support. Now, what you're now going to notice is we've dropped in price and then we've kind of flat lined a little bit. Now, it did gap down on the earnings. So the investors didn't really like what they had to say about the earnings. It gapped down and we're hovering back down near support. Now, when we talk about bear flags, we can make a lower low and then hook back up, lower low, lower high. The kind of more negative sign of this is lower low, and then we kind of go sideways, okay? Now, if we took a look at this, what you're going to notice is which one is more bearish? Which one is more bearish? Well, some investors kind of think the stock that doesn't really rebound off the bottom, that's the one that's maybe a little bit more bearish. Now, let's practice a bearish trade. What's one of the most basic forms of a bearish trade? Well, number one is a short stock, S stock, okay? Short stock, okay? I'll put S, short the stock. We talk about that in the fundamental class. That's a foundational understanding, okay? That's more risky for sure, okay? The long put, we'll put right there, LP long put. The nice thing about the long put, the risk is the premium, okay? You could lose the entire premium. The benefit of that one is positive vega. Volatility were to expand, it can inflate the option values, benefiting the person who is long the puts. Interesting. Con, negative time decay, okay? Long put vertical, same idea as the long put, but just sells a put as well to decrease the debit, okay? But it has a less negative delta, meaning if the stock drops, it doesn't make as much as a long put or a short stock. Now, if we did an SCV, a short call vertical, which why would someone do this? Well, they're trying to trade probability, okay? They don't need the stock to typically move, positive time decay, flat typically on the Vega, But the con is, if the stock went down to 60, it only makes what the premium is. Now, many investors might have, that's a bad taste in my mouth. They might choose to say, you know what, James, I want to try to do a long put vertical. Now, how many of you think that some of these companies might start to announce kind of what the effects of the tariffs have done to their business? Is anyone in that boat? Now, don't get all in the boat at the same time, okay? So if we looked at this and said, okay, maybe could First Solar be a business that might kind of show some tariff effects? Now, again, we have mostly bullish positions in the sample trades of the portfolio, paper money portfolio. Let's say the investor says, look, we're going to go to the June expiration, and we're going to consider buying the PETs or buying a put, the first one that's in the money. Well, on the put side, that's the strike that's above the current stock price. All right. Now, do you notice any difference in the open interest compared to the first one we saw in Wisconsin Energy? Well, yeah, for sure. Thousands, okay? Now, if we also look at, let's say, what's the volume like? Well, that volume today is not huge, but there is some decent open interest there. Now, this is just so far today. Now, what we're going to do is we're going to right-click on the 130, the ask price in June, buy, and then what we're going to do is going to go to vertical, okay? Now, if I click on that, what you're now going to see is that we're buying the 130 put. Now, wait, if you buy a put, where do you want the stock to go? You want it to go down, okay? Now, what's the purpose of the 125? Can anyone tell me that? What is the purpose of that 125? Answer, well, you sell the put, it creates a credit. You buy the put, it's a debit, you pay for it. So number one is by selling the put as well, it actually reduces the debit. Who cares? Well, we wouldn't say such a thing, because what you're now going to notice is when we also sell the put below, what it does is it creates in this case, what we see is the debit is what the potential loss could be given the vertical. Now, what you're also going to notice is if we have a right to sell the shares at 130 and we pay 240, we need the stock to go down to 127.60. Okay? So where's the stock now? About 129. If we go down about a buck and change, that is break even not today, but at expiration. Now, what you're going to notice is the implied volatility of First Solar is pretty high. Now, if this stock drops, maybe quite aggressively, some investors might have regret. They might say, dadgummit, I wish I didn't do the vertical. I wish I would have done the long put. But nobody can see the future, okay? Now, what I'm going to do in this case, in the IRA account, we're going to go there because we're going to try to do a couple contracts on this, maybe 3 of them, okay? Now, on First Solar, what we're going to do is we're going to right-click on that 130, buy, and we're going to go right to that vertical. Now, when we look at the debit, again, that is per contract what we could lose given the vertical. Now, in this account, if we could lose, let's say, $750, it's going to be about 3 contracts. So 3 contracts times $243 a contract, that's going to get us right around that $750, okay? Now, if we put this trade in, also note the commission, send the order. If that trade were to get filled, is it drastically going to change the delta on the portfolio? We're at 571 right now, okay? We're at 571 right now, and that's without really the First Solar filling. Let's go back and kind of watch that and see if it gets filled. Now, I'm kind of thinking if it gets filled, what do I think? 718, probably going to be about 553 or so. The delta for First Solar, if we brought it up and said how bearish is that trade, let's put it on the risk profile. And what we're going to do is just put it in terms of 3 contracts. So if we change this to 3 contracts, you're going to see that the delta there if I did 3 contracts, okay, and we said how many, what delta is it for the 3 contracts? It's going to be negative 24 delta. Now, what does the negative delta mean? It means it's a bearish position, okay? You want the stock to drop. Now, notice when we look at gamma, pretty much close to 0. Theta, pretty much close to 0. Vega, pretty much closer to 0. Which option Greek is biggest? Delta. If that is the case, then that actually tells us that we're trying to do a directional trade. Bearish. Hence negative delta. Now, I'm going to go back to this. And if we look at this and we take a look at that, we now see that with First Solar, and I don't know actually how that happened. That's interesting. We have 6. Now, this is a good learning lesson. We did 3. I don't know why it filled 3 more. Have you ever had a situation where you meant to do 1 or 2 or 3 and then you realize, oh my gosh, it wasn't what I thought, I did something wrong? We don't have to panic here. I'm just going to right click into this, create closing order. And what I'm going to do is I'm going to buy just 3 of those back. Okay. Confirm and send. Now, so the bad part about that is not the profit or loss per se. It's the commission of the trade, right? And what you're now going to notice is if we go down, I said about 553. It's a little bit less than that. So a bearish trade doesn't necessarily mean it changes the portfolio sensitivity. Okay. Not on a vertical. Okay. We're still bullish overall, okay? Now, here's the deal. I know the market has moved to the upside as of lately. Does that mean that all bearish trades are for naught and that there's never going to be any stocks that go down ever again? Okay, that's funny. So we want to make sure that we continue to practice, and I think maybe some investors are thinking going into the summer, some of these companies might come out and kind of say, hey, earnings guy, we're going to kind of give an update on earnings, and we're going to kind of warn that the earnings might be less than feared. Now, do we know that on First Solar? No. But some of these companies that might get a lot of the parts and supplies from abroad, they could be affected. Why do we choose First Solar? Well, energy actually hit 57 yesterday. Crude oil did. Historically, actually, First Solar has actually had some correlation to that if oil goes down, some of these solar stocks tend to get pushed down too. One of the biggest names in the area is First Solar, and it's stuck. Now, you might be thinking stuck near support. You might be thinking, well, I'm going to wait for it to break support. But you also got to remember is on something like a vertical, it's not really super sensitive to time decay. Okay, so anyway. Now, yeah, so really it was more about the commission there. Okay, now I want to take a look at just real quick a couple other stocks that are kind of standing out a little bit. Travelers, we said we're going to keep an eye on that. Why? Huge V pattern, okay? We talked about some of the financials yesterday. Visa, MasterCard, but we brought up the one that is getting quite comfortable up near resistance, okay? Now, what does that kind of maybe tell us? Well, I mean, this is where people should be selling if they're fearful, but if people aren't selling, it means someone's coming in to buy and it might break out. So one of the alerts we're going to do just real quick, right click, create an alert, and we're going to say, look, if we get at or above that price, alert us. This is a potential breakout trade. We're going to keep an eye on the TRV this week. Now, if you also take a look at the IBM, which we talked about yesterday, that one this morning, where did the price come down to? It pretty much came down to the middle of the previous day's candle. Technicians call that S1. I'm going to tell you right now, so many times we'll see stocks down in the morning. You'll talk to your friend and they'll tell you how bearish everything is, only to see those stocks bounce up intraday, and you look back and say, well, duh, that was the S1 support bounce, and now I'm having regrets. That's why we don't care about the color of the candles in the morning per se. We care about where the candle is in relationship to support. If you just look at colors of the candles, it's going to be very difficult to ride the trend because you're actually just trading based upon the color of the candle and how you feel. What you'll notice about success in anything, it tends to be the opposite of how you feel. Don't feel like doing anything a lot of times, right? So now, I also want us to kind of keep an eye on GE, Okay, that's another one that's actually right back up near the top. The other one that we're going to kind of keep an eye on just real quick is a stock like ICE, another massive V pattern. And what you're now going to notice is its twin cousin with red hair, CME. There hasn't been a bear market in CME. Now, I want you to look and see, what does CME do? What does ICE do? Why did CME go up irregardless of what happened with tariffs? What do they do? Now, we know CME is up more, right? If we had a little bit more time, could an investor consider maybe a trade on ICE? So that's another one we're going to keep an eye on, okay? So we did 2 sample trades here today. We talked about the utilities, CEG leading. We did a sample trade on WEC. Also note AWK, okay? That's also doing the ascending triangle. Second, we talked about First Solar, okay? Practicing a long put vertical. And lastly, we brought back up the financials, which, by the way, ICE and CME, we could include in that, okay? But I want you to kind of look and see, what does CME do? What does ICE do? And what does that have to do with market volatility? Do they benefit off it? How do they benefit off it? Okay. Now, this is not a recommendation, but it's worth kind of looking into to kind of see, why did that stock buck the trend? I'm out of my time here today. I want to thank you for your comments and your participation. Thank you, Barbara. Stay tuned for our session coming up next on getting started with options. And also remember, with what we discussed, it was done for example, illustrative purposes only. Go out and practice. That's how you learn. With that said, this has been the Investor Master Series. Thank you, Barbara, and stay tuned for our next webcast coming up next. Take care. Bye-bye.